Yatin Mota. What a wonderful Wednesday for markets. Sensex closed with 900 points gain, while Nifty closed near that 24,500 mark. Of course, the major market mover, that has to be the US presidential elections, with Donald Trump emerging as the formidable winner. So not just the popular mandate, but Donald Trump has secured both the Senate as well as the Congress. Yatin, this time, not even exit polls. Markets predicted it and they called it. We saw the Trump trade playing out easily earlier. Today also, dollar index hit 4-month high and treasury yield surged over that 3-month high.
Absolutely, and what a victory it has been for President Trump. Now, if you look at the markets, they were not expecting absolute majority in both of the houses in the US, but this is unprecedented. The popular vote also went to Donald Trump, and I think this victory probably marks a very stable regime for the US economy. It needs to be watched as to what Trump really wants to do in terms of the economic policy, because in the past term we have seen that he usually tweets a lot of impact happens, then a lot of volatility in his decision making, which clearly impacts market on a daily basis. But yes, he's pro stock markets, he's pro employment, he's pro lower inflation, and he's pro lower interest rates. All these factors probably augur well for the Indian equities and emerging markets like India, especially when you have a anti-China stance, which has been the case in the past presidential term for Trump. So everything will be watched out for. It's too early to really talk about how the equity markets will react in India. Will the IT sector gain, or the pharma sector gain, or probably metal sector shine? But yes, it's an unprecedented victory for Trump in the US elections, and the markets, yes, reacting positively to that event. And if you look at the Dow futures, they're also showing a 1,000-point rally on Wall Street.
Yes, absolutely right. But on that note, let's quickly take a glance of how the markets fared today. So yes, a broad-based buying was seen across all the counters in today's trade. We started off positively, and the momentum also gathered pace throughout the day with Trump's sweeping victory in the presidential elections. Of course, he's set to become the 47th US president. But that aside, all the sectors settled in the green. Volatility, that cooled off by 7%, settled at 14 odd levels. IT sector, like you pointed out, that was the sectoral winner, surging to over 3-month high in today's trading session. But other than that, all others also enjoyed the bullish momentum. If you look at some of the top Nifty 50 gainers, that included Bharat Electronics, Adani Enterprises, TCS, Infosys, Wipro. So all the IT counters, they were at the forefront in today's trading session. If you look at some of the top Nifty 50 laggards, we have insurance plays, SBI Life and HDFC Life dominating the list. Apart from that, we have Titan after management cut its EBITDA margin guidance. So we will be talking about more later in the segment as well. Apart from that, IndusInd Bank, that saw profit booking after yesterday's rise, and FMCG major HUL also was in the Nifty 50 losers list. But broader markets, they outperformed benchmarks. So Yatin, what was the top movers and shakers from there?
So if you look at the mid-cap end of the market, a lot of movers and shakers. In fact, today, about a broad-based rally day. The advance decline ratio also almost 5:1. So good moves coming in for the mid-cap indices also, which were higher by more than 2% each. If you look at the gainers in the Nifty 500, we had stocks like Keynes, Syrma, Dixon Technologies. Obviously, the reason why these EMS or the electronic manufacturing stocks are higher is the fact that the preference for trade will be increased for India, especially when it comes to electronic manufacturing. So all of these EMS companies were gaining in trade. Other stocks which gained momentum is Piramal Pharma stock at a new 52-week high, 7% higher. Kalyan Jewellers 7% higher. GAIL post the earnings, surged 7% in trade. What was not doing well is Hindustan Zinc. Today was the off for sale, wherein the government kept the OFS floor price close to 505 rupees per share. Post with the shares declined nearly 8%. Triveni Engineering weak results, stock down 3%. Chola Holdings, GE Shippings were the other stocks which were slightly under pressure in trade. But as I mentioned earlier, stocks like Piramal Pharma, Deepak Fertilizer, Nuvama, all of these stocks hitting fresh 52-week highs in trade today.
All right. Let's kick off things with IT stocks in spotlight. Like we discussed, shares of big players like TCS, Infosys and HCL Tech, all of them rallied up to 4% each in today's trading session. The lift in IT stocks was clearly after the US presidential elections that showed Donald Trump making a comeback. Now, a full Trump sweep could be a big win for the Indian equity markets, like you pointed out. But thanks to expectation for a business-friendly tax regime and, of course, lower regulatory hurdles. Plus, we saw that the dollar index hovered around that 104 odd levels. So that's good news for our, export-oriented companies as well. Let's not also forget that the corporate tax cut, which is expected to go down from 21% to 15%, that could see some ease in the budgetary pressures for the IT services company and augur up well for the order book. So yes, all in all, quite good for the IT sectors, and we will be watching out how it goes. So yeah, then IT stocks, they were cheering after the 2-day slump. So do you believe that this rally is just a quick reaction, or can we see some sustenance?
So I think Trump's pro-economic policy, as you were mentioning, tax cuts probably will help, the corporate US Inc. Save better, invest better. That clearly means good business for IT companies. Obviously, the visa regulations are something that the market remains wary about because, Trump really believes in local employment versus outsourced employment. So that is one catch area. But apart from that, lower taxes, higher, benefits of investment in America do augur well for Indian IT companies. But from IT moving to the jewelry segment, which was obviously led by earnings of Titan. Now, during the quarter, we saw Titan post surprise lower than expected profit number because they had almost 300 crores plus of inventory write down because of the duty cut and the gold mark to market. Obviously, if you look at the margins also, they saw a big tick down versus the expectations. Margins also surprised on the negative side, almost 2% lower than the street expectations. Now, Titan also has reduced its margin guidance given the fact that the share of studded jewelry, which is diamond jewelry, has come down. Higher gold prices might impact demand moving forward. That reacted the stock on the negative side because shares of Titan dipped as much as 4% in intraday trade, despite the fact that we had a big rally in the markets. Obviously, if you look at the brokerages, they are not very gung-ho about the kind of commentary that Titan has given. In fact, if you look at brokerages, they have cut the target price for Titan by a significant number. 3,400 is where Jefferies has put the new target price. They've cut the target price. They believe that the management commentary on demand was reasonably positive despite the fact that gold prices are inching higher. Obviously, the inferior product mix as well as the overall share of studded jewelry came down, which has impacted the margins in Q2. For this reason, they have cut the FY25 earnings estimate by nearly 3% and for FY26 by 7%. And probably, this is the reason why the stock was slightly languishing in trade today.
All right. Moving on from Titan to Dr. Reddy's Lab. That stock surged about 3% in today's trading session after the pharma company recorded its highest ever revenue from operations. So revenue that rose by about 16.5% year on year in Q2. However, net profit that declined by 9.5% year on year due to one-time expenses. Now, what are the brokerages saying after its mixed Q2 performance? Well, analysts at HDFC Securities, they are underconfident about Dr. Reddy's outlook, as beyond Revlimid, they feel that there is insufficient pipeline visibility to sustain its growth and margin momentum. The brokerage firm has given a reduced rating on the stock and put out a target price of 1,330 rupees per share. Jefferies, another brokerage firm, they've also shared an underperform call on Dr. Reddy's and shared a target price of 1,130 rupees per share. They see that the Q2 has a small miss on weaker product mix and higher R&D spends. Moreover, a lack of major product launches for Dr. Reddy's, coupled with higher SGA costs, means that there are no near-term catalysts to aid the drug maker stock performance. Yet, despite today's upside, brokerages are quite cautious on the counter. What do you make of it for Dr. Reddy's?
I think brokerages are cautious, but I think the commentary of the management with respect to the price erosion in the US markets is slightly better than the street expectations and probably the reason why the shares moved up. If you look at Dr. Reddy's, they believe that the generic pricing, which has been under pressure for last few quarters, I think they have stabilized. In fact, the launch pipeline also for Dr. Reddy's looks better than what it was earlier. So I think on an overall basis, numbers were slightly muted, but the outlook probably is the reason why the shares moved slightly higher in trade. Overall, a good quarter for Dr. Reddy's in a challenging environment, and the outlook also with respect to new launches as well as pricing of generics on the positive side. have seen the stock, make a move today, almost 2.5% higher, post slightly lower than expected numbers for Dr. Reddy's on good commentary.
Okay, let's shed some spotlight on SBI shares. It has been one of the most active stocks in the past 3 days, and it has gained about quite a bit during the period as well. So now the largest lender, it is expected to unveil its September quarter results on 8th of November. As per Money Control poll, it suggests that the public lender is expected to clock about 18% year-on-year growth in profit amid stable asset quality and healthy loan as well as deposit growth. The poll also estimated the net interest income to grow by 10% year-on-year. However, margins are expected to remain flat on an annual basis. SBI, Yatin, several banks have reported higher slippages and weaker asset quality, but the stock has been buzzing ahead of its Q2 results. What do you gather from this?
I think ahead of results, Lavisha, as you're mentioning, there is long build-up in the future and option segment also. And if you look at the last 4 or 5 trading sessions, the PSU banks have clearly outperformed not only Nifty, but the Bank Nifty as well. So they are, better placed versus private sector banks when it comes to earnings growth. And I think SBI, ahead of numbers, has witnessed some good amount of buying. If the numbers are also good, I think the stock can probably have some legs to upside. But yes, results is something that the markets will be watching out for. And especially, we have the new chairman also coming in. So his commentary also with respect to growth, loan book, as well as asset quality moving ahead would be quite important to watch out for.
All right. Now, with that, we have come to an end of this edition of the Closing Bell. We have the Fed's meeting underway. We will be tracking how the US markets also react tonight. Potentially, we are eyeing for a gap up open, but let's see how it develops. But until then, signing off, Yatin and me, stay tuned to moneycontrol.com for all the news updates and market insights.